Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So we're going to dive right in, take a look, see what people are sharing, and I'll share my opinions. If you want to follow me at Funny_Finance, and if you want to join our community, finding-value.com, I dive into all of these different companies and I look for the most leveraged companies I can find in the market. I think that we are real close to bottoming here, and that's when you want to load up in these higher cost producers that can grow production into what I think is this large commodity bull market that we are in and is coming. So I share all that and how I do that with everyone in the community. It is obviously from a training perspective, so you can learn how I'm doing it, why I'm doing it, the information and data I look at. We just went over a Q&A. I went over oil and why I'm bullish on oil and all the reasons. And I used information from the market, inside the market, and patterns and ratios and technical analysis, all that stuff. So if that sounds interesting and you guys are obsessed with kind of figuring out the market, this is a good one to join and learn from. Special is the coupon code if you guys want to save some money. So special, type that in the coupon code and get some savings. So David Burrows says another inflation asset versus a disinflation asset. And he's exactly right. That's exactly what I look at. Energy relative to QQQ, which is your NASDAQ. I think that's NASDAQ 100. Presenting an interesting monthly bar reversal from a higher low on the long chart. The market's nature is changing. So my opinions is that it changed in 2020. That was your ultimate bottom. Your ultimate bottom is where that circle is in 2020. That's where I had purchased in some of my energy stocks and uranium and some other areas. And the reason I chose energy is because it's one of the most leveraged sectors in the market. Not all sectors are the same. Energy, natural gas, uranium, coal, they're all very leveraged to the upside. They're very inflation sensitive too. So as this outperforms, and then we see another consolidation, and we're just starting to break out with a pretty big bullish engulfing candlestick on the energy producers outperforming QQQQ, we are entering a different market condition. That's what it means. We're going to start to see an outperformance of energy. It also could signal that inflation is starting again. And that's what these market conditions tell us. The ratios tell us the market conditions, and this is one of the ratios that you could use for evidence of a changing market condition. He's saying the same thing. And I just want to make something very clear to everyone who's listening to this. I've invested since basically the mid 2000s. I saw the tail end of the last commodity bull market. I saw some crazy crap, guys, like 10 baggers, 20 baggers in very short time frames. I was not seasoned enough to take advantage of that. I was brand new. I saw companies do crazy things in commodities. And I was just sitting back in awe of how stupid I was trying to trade that stuff. I am not trading this. I am holding on. I'm a buy and hold investor. And I'm gonna ride through this entire bull market. What this is telling us right here is that this condition is just starting to change. And we are coming from a very low level. Crude oil priced in gold is about a 45 to 1, 45 barrels to 1 ounce of gold. Historically, that is incredibly cheap. This is like a gift for anyone who knows what the hell they are doing. It is a gift. And I'm going to let you guys know a lot of people are going to screw this up. They're going to screw it up like I did in the mid 2000s. I didn't know anything about the cycles. I didn't know garbage about, I didn't know crap about anything. All right. I was a new person making money, looking at investing, and I was like, I want to invest. I want to learn this. I was in my early 20s. 23 years old was 2004. I started investing in 2003, in fact. I was 22 years old. I didn't know anything. Didn't know anybody that knew anything either. What I am telling you right here is that when you start to see these things break and the market conditions shift from the levels that we are at today, energy is going to be one of the best performers over the next 5 to 10 years. And you are buying it at a level that is ridiculously stupid cheap from an energy perspective of oil. And what makes this even a better setup is that the companies are cheap as well from a financial standpoint. Price to earnings, price to book, price to whatever, it doesn't matter. These setups don't come often. You get about once every 10 years to load into it. That's it. And you don't want to blow it. That's what I'll say. If I could tell my earlier self something, I would just say understand the cycles, understand ratios, the technical analysis, get good early entry points, and do not sell. Hold on. You're going to have to hold on through 40, 50% pullbacks in this bull market. It is as expected. And because you get a 50% pullback, it does not mean that the market conditions have changed. It is normal in commodities to have 50% pullbacks during bull markets. And not many people understand that. They're going to tell you otherwise on Twitter. They're going to tell you otherwise on YouTube, and they don't know anything, is what I will say. So this is the beginning of that move. Get ready. Better research the companies that you like. Start looking around at smaller companies that haven't moved. It's coming. It's coming. Jordan Roy Bryn says, inflation-adjusted gold prices breaking out of a 45-year base. Again, this is more data backing what I'm saying here. All-time weekly closing high last week and all-time monthly closing high today. There isn't resistance above us, guys. This can run. Gold stocks follow the inflation-adjusted gold price because it tracks margins very well and much better than the gold to CPI or anything else. Mine builders and miners are in near heaven at current prices and margins. Margins could drop 10% and they still would generate massive cash flow. They don't need margins to move higher to create significant value over the next few years. But the breakout in the inflation-adjusted gold price conveys serious risk to the upside over the next few years. So a lot of people, they're getting frustrated. How come the gold producers and silver producers, how come they're not moving higher? Why aren't people buying them? Number one, if you're listening to this, you are far ahead of anyone else. Knowing these patterns, knowing these breakouts, this is just the beginning. The people riding the short buses have no idea that this has occurred yet. They're all FOMO buyers. They're a bunch of squirrels running around trying to find a nut. Yes. And then, what is that? An Entanda or whatever it is. That's all they are. So you're ahead of the group. You are positioned when you should be positioned at the bottom here. Now you wait. That's where extreme patience comes in place. You wait. The breakout and the conditions are changing. That's what this is. This is the conditions. Now, miners make money when the gold price goes up and stays up, and then they can sell products into higher prices. That's what impacts their free cash flow generation. So we've got the setup here. Now you have to do your work. You need to become emotionally stable. You need to find your companies, develop a strategy, get hooked into the companies that are great, sit there and don't do anything. And let this tailwind push you on up. Let the companies generate cash. Let them come out once every quarter and tell you how much money they've made in their quarterly earnings conference calls. Sentiment's going to flip all around. It's going to be good some weeks. It's going to be bad other weeks. The quarterly earnings conference calls is a glimpse into how well the business is doing. And with these types of conditions that are coming up, the miners should do pretty well. Narrative, oil demand is weak, recession. Data, U.S. crude oil demand is up 6% year over year. U.S. oil demand was 20.736 million barrels per day in January, up 1.149 million barrels per day or 5.9% year over year. Decline, baby, decline. We can't make money at this price of oil. If demand is going up and oil prices are low, and they're undervalued in relationship to the inventory that we have by about $20 a barrel. Do you think I'm going to go long in this? Damn right I am. I'm not going to sell because people think something's going to come. The data is bullish. I know the markets are forward looking, and we are way underpriced on oil. That's where we're at. Smart real estate bets. My apologies if this simply represents typical seasonality. I have a sneaking suspicion it doesn't. Could this be pent up demand deciding to stop waiting for the panacea of interest rates and get on with their lives? Never mind, must be fake news because demand is dead. Mortgage purchase applications are up 80% between January and March. That's interesting. Shabam says Texas crude oil production is now down 3 months in a row and 250,000 barrels per day or 4% below its October 2024 high. Rig counts still dropping, Dukes no longer available, well productivity continually degrading, and no private companies ramping production. It equals expect to see this trend continue. Declining oil production in the United States crude oil with demand up. Drill, baby, drill? I don't think so. Not at $70 a barrel. Coming down, Casper, here's gasoline. So gasoline, when you think about about demand, demand is closest to refined products. So refined products like gasoline, diesel, jet fuel, those will go up. You'll see the crack spreads go up, and then you'll see demand for oil behind it. So we've got peaky above for gasoline. If this breakout holds true, inflation will be on everyone's mind again. This is a falling wedge, 3-hump consolidation, and we are breaking out on gasoline. That is closest to the consumer. Looking interesting, guys. I like it. HFI research is U.S. crude oil production is disappointing to the downside. It's going to become more obvious as the months go by. Specifically, consensus will be off on U.S. crude oil production by 550,000 barrels per day in Q2 of 2025, which is one of the key reasons global oil inventories won't build. We're already at low oil inventories. If prices stay where they're at, we are going to eat through inventory. We are going to have a fair value of oil at $100 per barrel in a heartbeat. It's coming. Tick, tick, tick. Canadian crude squeezing before busting a breakup. Yeah, that breakup. Bullish engulfing on the monthly. This is do I use a monthly or a weekly candlestick here? Monthly. So on a monthly candlestick, this month here in July, we have a bullish engulfing to break higher for Canadian crude. Your breakout is A, your ideal entry points are B, and we are about to break. Double bottom here. Looks fantastic. I don't know how you can be bearish with a bullish chart like this. Sorry. I just don't see how. 250,000 barrel production miss for Jan 25. It doesn't matter till it does. WTI remains undervalued. Funny that all the recent data is 100% bullish, while the bears deliver their argument as narrative and or EIA, IEA forecasts. Jesse says silver's been slammed in 4 out of the past 4 trading days in full confirmation of everything I said in my report. These are the big morning slams that we keep getting in silver. People get frustrated. They say, you know what? I'm sick. Why am I investing in silver? I'm sick of all these slams. Guys, I'm going to say this. You want to go where they don't want you to go. Why? Because it protects you against them. They don't want you to be here. They don't want you to be in gold. They don't want you to be in silver. The problem is it's a signal to the market that there's a problem with the currency system. I am running at this stuff. I already ran at this stuff already. I would still be running at it. I'm getting my money out of Dodge. Dodge is the dollar. I'm getting my money out of Dodge, aka the dollar, and getting it into things that protect my wealth. And if they're going to manipulate this lower, perfect. I'll buy more of it. Go right ahead. Do whatever you want to do. Crude oil looks like it could get explosive. Energy stocks are leading, a bullish signal for commodities as a whole, says Rock Bottom Entries. I agree. I think energy is going to do something absolutely astounding here when we break out of this. Now, could we get a false breakdown still? It's still there. I'm not saying that it's just going to go straight up. I think by 2030, which is 5 years out, that we're going to have multi-$100 a barrel oil. Multi-$100 barrel. It could be as high as $400 or $500. Now, could there be something between where we are today and that price, where we get yanked lower by the overall markets? Very well could. Very well could get that volatility. But right now, with the undervaluation in a lot of these companies, I don't care. I'll take it, and I'll ride through it and buy more as we go. Christine says, it's not about how much oil and gas is in place. It's about how much you can safely and economically be extracted. Remember this point anytime someone talks about production runway. I hear a lot of people like, oh, there's all these reserves. Well, how much does it cost to get out? Oh, there's no production there. Yeah, you guys have to take into account how safely and economically it can be extracted. Totally agree with Christine. Here's a couple of ratios. XOP versus SPX, the S&P 500. XOP is a ETF of energy. So I put energy putting in the work. We are starting to see, and this is very similar to David Burrow's comment, a potential breakout that's occurring right here. And this means that the market conditions are changing. Inflation versus disinflation. We also have U.S. oil versus the SPX, and this thing's ready. I mean, this thing's going to, we break out of this, guys. It's the same fractal as the 60s and 70s. This is going to be a big, big move. Big, big move against the SPX. It could go way up. It could go way up. Palladium is a generational buy opportunity, says Rock Bottom Entries. $6,000 target would align with previous cycles. We've got a lot of support right where we're at. I agree. Palladium is generally off cycle here, but it could easily run higher with rhodium and platinum and other platinum group metals. Easily. If we get the right market conditions, and these are all substitutable back and forth for certain things. Platinum and palladium can be. I think platinum's going to outperform. I think we're going to see a big move in platinum, and I think palladium will come behind it. That's my guess. Fortunes will be made, says Grady. Been saying for 14 months, gold $3,000, $3,300, and silver $40, $45 is next. Also said since the 13-year gold breakout 14 months ago that think gold will have a historical lockout move, i.e. that it will not backtest that huge 2100 level breakout. And that is what happened. Gold did not backtest the breakout. Seeing many arguing that precious metal miners are no good just because they are sometimes lagging the metals. That is not very useful information. And repeating that endlessly shows one does not understand the miners or big picture charting. Just like with metals, playing miners is all about timing. Many are worried about that the miners are not outperforming metals big yet. But it is not unusual for metals to take the lead up from big lows. And when that wall of worry lets go, we will see 8 to 10% up days for GDX and 10 to 15% up days for SILJ. The commodities bull market started 5 years ago, called the bear market low in real time, and it will be the bull market ride of our lives. A true generational opportunity continued with the gold 8-year cycle low back in 2022, called it real time. The miners bull will evolve in stages. The third stage for miners, up from 2022 lows, started 3 months ago. Very soon, the ratio below will start its journey higher. Do not miss it. Fortunes will be made. Keep that in mind, guys. Patience, patience, patience. Gold breaks first. Everything else follows behind it. It's coming big. This is a double bottom. You get a breakdown, double bottom here. And then we roll. We're going to roll so hard that people are going to say, why didn't I buy earlier? Not me. I'm going to be in this. I'm going to ride it. And I'm riding it with a variety of sectors. I cover about 8 sectors on the website. And that's what I'm invested in. I've got a lot of energy, a lot of precious metals, some other commodities like fertilizer, shipping, tankers. There's some other things mixed in. I cover uranium, oil and gas, energy service, the precious metals, platinum, palladium, platinum group metal companies, stuff like that. It's all coming. It's all coming. And we are super early here, guys. This is like a dream within a dream within a dream within a dream. Like, this is the alignment that everyone waits for in their life. A cheap GDX price to GLD, or a cheap price to gold. Gold's breaking out, it's ripping, and everyone's picking their nose saying, well, how come it's not moving? That's not the right question. The right question is, how should I position? What should I be buying? Let's get ready for this thing, because when it does move, it's going to go, hopefully, epically higher. Peter Sutherland says, you were promised a huge Q1 oil glut. Instead, inventories have drawn counter-seasonally, confounding every hopeless bank analyst and captured agency lobbyist. OPEC needs to accelerate its return of barrels, or the market will be dramatically tight by midsummer, triple digits loading. People are not ready for this. They are mispositioned. Drill Baby Drill was just a sales point, guys. They got you. We don't make money at $70 a barrel. We could be $150 quicker than what most people think. If demand stays where it is or continues to go higher, I should say, if the demand growth continues to grow like it has been, we are going to get in trouble. Oil prices are going to go. I mean, they're going to go. They are going to go. And it's not going to stop at $100 a barrel. We needed to be at 100 already to get production volume up, to absorb the growth that's coming. We're totally mispositioned here. Platinum is a generational buy opportunity. I'm glad Rock Bottom Entries is noticing the same things that I'm seeing. Volumes ramping higher. I only need 1 or 2 of these things to work for me. If silver works, great. If platinum works, great. If gold's already working. If oil works, that's even better. I mean, maybe they all work at the same time. That would be really good. If uranium works, that's good. If fertilizers work, if coal, if any of these work. Focus on value, because most investors focus on outlooks and trends. You must be a fundamentalist to be really successful in the markets. Take that to heart. It keeps you out of bubbles when you're always buying value. You avoid bubbles, number 1. Number 2, it keeps you in the undervalued sector, and then you wait for the market conditions to come. That's it. That's what Buffett does. Value. If you find where all the value is, you'll see where you're at in the cycle. Freight futures AM update. We had Capesize and Panamax down 2%, and VLCC and Suezmax down, or flat, I should say. Gasoline, we already covered that one. Energy is the lone survivor of March's market pullback. And he talks about some of the largest companies. Meanwhile, semis, or semiconductors, and tech limp into Q2 as 2025's worst performers year to date. There's that rotation occurring. China's March official PMI, manufacturing PMI 50.5, that's increasing. Anything above 50 is increasing. Non-manufacturing PMI is 50.8, and composite PMI is 51.4. So they're actually getting better. They're improving. They're growing. That's good, and that's going to be good for commodities. China's factory activity expands at fastest pace in a year. That's good. We've got the last 100 years, 1 USD has lost minus 99.993% of its value versus gold bullion. The last 0.007% will be a guaranteed freak show. All the value out of the dollar will go to zero. It is coming. I'm not going to go over this. Skip that. Most non-gold bugs are bullish on gold, but getting it very wrong. Think normie investors and Wall Street types. They think gold will have a blow-off move to $3,500 or $4,000, and then they can go back to the stock market. Gold broke out from a 13-year base only 12 months ago. Gold just broke out from a 10-year base against the 60-40 portfolio. It's over for the stock market. You don't know it yet, and you can't admit it. Gold is just getting started, and the above is why it's truly going to explode after the next pullback. I'm just riding this thing, guys. I'm reading other people's opinions. I totally agree with it. I was just here in 2020, chilling, waiting, while everybody told me I was wrong. Hey, the commodity bull market, commodity super cycle, It's all in a super cycle, guys. I don't know what to tell you. It's coming big. It's gonna lay it on thick here at some point. People will all start to notice. The first rule of fishing is fish where the fish are. And the second rule of fishing is don't forget rule number 1. And in investing, it's the same thing, says Charlie Munger. And that's, don't lose money. And then don't forget rule number 1, don't lose money. What I do is look where the value is and look where the asymmetry is. Value and asymmetry are similar. Your largest asymmetric bets, I would say, at this point of time, precious metals, the mining companies are really low, and I think energy, a lot of energy stuff is really low. And then you have to look at your vehicles. Your vehicles that you're playing it with matter, and the way that you position size in them. Big difference on playing something that's got a high probability of success versus something that has a very low probability. Depending on how big this bull market is, we could see a lot of things go up, though, and depending on the sectors. This is the play of big rotations or get left behind. This is one of those cases. Gold is breaking out big versus the S&P 500. This is all the bull market, guys. It did it in the 70s. It did it in the early 2000s, and we're doing it now. So do you really think we're not in a commodity bull super cycle? We're in a super cycle. We just started it. 2020 was the bottom. We are advancing this out of a consolidation, and we are going to move higher. Now, what's the good thing about knowing this? Why is this so important? All of the uranium people that are so bearish on uranium right now, you can literally comb through the sector and get whatever you want at dirt cheap prices right now. And then be patient for those guys to come back, the FOMO people. You could go through all these different companies right now. Get whatever you want. It's all cheap. And just wait. Because when this is going and it starts breaking out like this, it's coming. It's coming. You can position before everyone else. You can do the big short. The big short, what did he say? Or no, it was the margin call, I think. Is it margin call? I think it was margin call. They said you can do 3 things. Be first, be smarter, or cheat. And right now, we are being smarter and being first, which feels like cheating. Grady, so this is Grady, posted the setup first time a year ago. Few believe, still on track. Gold maybe at another all-time high. He says, time for them to decide. Parabolic move from here or not. Silver and gold. Here we go. We're ripping. We're ripping. Investment Wisdom said, quote, Success in investing doesn't correlate with IQ. Once you have ordinary intelligence, what you need is temperament to control the urges that get other people into trouble. FOMO buying, selling, panic selling. So what I did is I combined it. Panic buying. You buy when panic is in the markets. That's how you make the most amount of money. Panic buying. It says people don't understand that what's coming with Chinese gold buying is probably at least 10 times that of 2012, if not more. Some Chinese people now got 10 times more money versus 2012. Big buyers, big buyers. Silver ready to run, nearly no resistance upward once you get above $35 an ounce. That's kind of what that means there. And that's where I'm going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special coupon code. I go over all the companies that I think are the best. We just found a new company that's kind of a integrated company, looking pretty good. That's emerging markets. I think it's could be pretty good potential there. And yeah, lots of good opportunities here. So that's all I've got for today. We'll catch you next time. This is Finding Value.